So in the panel session today, we have from Silta Finance, Ben Sheppard and Stanley Boots and Arthur Machado. We call you intermittent, like we rotate between Artie and Arthur, so perhaps you can clarify when we hand over to you what you prefer to be called. And Coinsilium's CEO and co-founder and my co-director, Eddy Travia. So I think to start with, if I can just pass hand over to the panelists to introduce themselves. Well, before I do that, just to say that we will then go into a 35 to 40 minute discussion where each panelist will talk about various attributes, certainly from the Silta side, and Eddy will give his commentary on why he felt and Coinsilium feels that it's a compelling and interesting investment case. At the end of the session, we'll have a Q&A session, which will be about 10 minutes or so. And if you have any questions that you would like to ask, please feel free to put them down in the Q&A part in the which is next to the general chat and DMs, and we'll look at those and we'll compile those, and so we can have them ready for when the session ends. So without any further ado, I'll hand over to our panelists to introduce themselves. If we can start with you, Ben. Please tell us a little bit about yourself concisely, and then we'll go perhaps next Stanley, then Artie, Arthur. We'll get clarity on that, and then to Eddy.
All right, thank you. Thanks for having me on today as well. Ben Sheppard, hi everyone. I'm one of the co-founders at Silta Finance. How to introduce myself? Well, I spent the first 12 years of my career working in project finance, initially in the UK with some of the bigger engineering companies, and then wider Europe before then moving out to Southeast Asia, where I founded a consulting company that specialized in infrastructure, legal and advisory services, specifically public-private partnerships. Have worked on numerous transactions, particularly within the transport industry. I think the largest I was involved with was $9 billion US, which was the car park that circles London, known as the M25. And then some of the others that I worked on were out in Southeast Asia with one of the other co-founders, Stanley, roads around Vietnam, Philippines, airports, ports, one fishing port, a railway. So numerous different infrastructure projects. Around the end of 2016, I came across crypto for the second time, but this time I decided that I wanted to make a leap into that industry. And so I found myself writing to a project called Streamer, which was building a very interesting project. I invested, bought some tokens, wrote to them with some ideas of how they could take their product to market. Before I knew it, they'd invited me to Finland and said, can you come over and talk to us about these ideas and help us take this thing to market? And so that was my introduction to crypto, and became head of partnerships for that project for about 2 years before then becoming CEO of a company called TX Tomorrow Explored, which did wider Web3 consulting services. So originally project finance, then some time in Web3, and Silta brings together both those careers into one new project that we'll obviously explain throughout this discussion.
Great, thanks, Ben. And Stanley, can you pick up? You're muted. You seem to be muted, Stanley.
Maybe Artie can introduce himself while Stanley's sorting it out.
Yeah, sure thing. So hi everyone, call me Artie. That's just a nickname. So I got involved in crypto about 2011 initially, when my friend told me to buy a coin called Bitcoin. He kind of explained it to me. I said that was a dumb idea. And then come back 2016, and obviously everything starts blowing up, and that's when I really get involved. So from 2016 onwards, I got heavily involved in Ethereum, and I kind of just watched the DeFi space progress until a project called Avalanche came around, and that's when I started getting involved in project partnerships effectively. So I'm the head of growth at Silta Finance, But prior to doing that, I'm a co-founder of a project called Alpha Hub, which is a non-for-profit project that assists DeFi protocols to find partnerships, especially within the Avalanche community. So through 2020 is when I got in contact with Avalanche and the DeFi protocols on there and started helping people build, effectively talking to them about their marketing, how to communicate with the DeFi community, because obviously it's quite different to TradFi, traditional finance. And yeah, I got in contact with Avalanche, DeFi protocols, and then it was only after I founded Alpha Hub at the start of, 2022? From there, once I founded that, I got in contact. Sorry, Stanley, can you mute your mic? I just hear myself. Sorry. So yeah, I founded Alpha Hub early this year, and that's when Avalanche really got involved. I spoke to the founder, Emin, and all the other personnel, and kind of just built from that. And that's how I got in contact with Silta.
Salty and Stanley, can we unmute you?
Yes. I was hitting the unmute button again and again, but it didn't like me for a moment. Okay, good evening, everybody. I'm Stanley Boots, also co-founder of Silta. I bring to the project about 23 years of project finance experience around Asia, Europe, and Africa. I am a lawyer, although I try not to admit that too often. A year and a half ago, I was invited by Ben, with whom I've worked on projects in the past, to come into the world of Web3 and bring a project finance perspective and PPP perspective to what we're doing with Silta and DeFi. So like Ben, I fell into Web3 late in my career, but have found this extremely exciting, as it gives us a chance to ultimately start to turn some dials and change the way financing works.
Great, thanks very much, Stanley. And finally, Eddy, can you introduce yourself?
Yes, sure. Thank you, Malcolm, and thank you for the members of the Silta team here in this session. So I've been the co-founder and the CEO of Coinsilium now since 2014. We have done a lot of great things, and lately, in 2020, we started looking at the world of DeFi. In early July, I wrote a piece about the coded income model, which I will briefly explain a little bit later, because I saw that the actors in the DeFi space were actually all working a little bit in a bubble and not communicating and not interacting too much with real world projects. And that, after some discussions with Malcolm at the time, we were looking for projects that actually do this link. And that's why we are very happy that we have been introduced and we have learned about Silta, because we believe they have what they need for that. But I will come back to this later, and I will let the audience discover more about Silta.
Okay. Thank you very much, gentlemen. Now, without any further ado, let's move on to the subject matter. So the title for this webinar is Silta Finance, Introducing Silta Finance, Building a DeFi Bridge to a Sustainable Future. And the key aspects of this is it's bringing project finance, sustainable projects in that respect, and linking it up to the world of DeFi, or the available funds that are on DeFi. So Ben, if I can perhaps start with you. I've probably given an outline, and if I was to say to you what problem you're trying to solve, I've probably answered the question before I asked the question, but how are you looking to solve this problem and if you can give us some context for this, and then build the discussion from there.
Sure. Yeah.
First intro.
Yeah, sure, absolutely. So Silta is actually a Finnish word. It means bridge in Finnish. And essentially what we're trying to do is bridge this world of sustainability focused infrastructure developers with the liquidity that's available within DeFi and also TradFi. So both sides of it. And what the sort of problems that we're trying to solve are around the speed of access to that finance and the cost of debt associated with that, because there's an inherent problem in project finance that the due diligence process is quite a long, drawn out process that has a lot of quite high transaction advisory costs. And in certain markets, the cost of debt can be quite high as well for what are, in the end of the day, quite long-term loans that can go 7, 8, 10, even 15 years in duration. So Silta does really two things in a nutshell. It does due diligence on infrastructure developers' debt financing applications. So an infrastructure developer comes to us, they say, hey, we want to raise 15 million in senior debt to build our solar project. They submit an application, we do due diligence on it. We also look at the overall impact that project is looking to deliver, and we assign a series of scores, which we call the Silta Score. And then once we've done that, we then basically present that to a group of financiers, as we refer to it, from both TradFi and DeFi. So we have this marketplace that we're developing that basically brings together these two worlds of borrowers that have been through a due diligence process and assigned a series of scores, with lenders from TradFi and DeFi who have been pre-qualified by us to then submit offers and enter into kind of this auction to see who can make the best offer to this particular borrower so that they can get financed. So this is how we're looking to bridge these two worlds together, by, in particular for DeFi, where they don't have the tools yet to do due diligence on project finance deals, because it's a very specific thing. This tool becomes very useful to them in being able to now bridge that liquidity to those projects. But also in TradFi, family offices, the new fintech banks, they also don't necessarily have the capability or experience to analyze a project finance deal like the bigger banks would do. So this is also something that's quite appealing to them if they want to start channeling finance into these sorts of projects. And ultimately, what we aim to do in Silta is build a better world. I know that sounds cheesy, but that's exactly what we're trying to do. We want more renewable energy. We want more people to have access to clean water. My wife is Filipino, my son is half Filipino, and we go back to the Philippines regularly to see the family. And I see out on those islands some of the issues that people on those islands come up against when they don't have access to electricity all the time, and they're running on diesel generators with a limited number of hours a day, or they've got limited access to clean water or limited access to education. And I think Silta can help difference to people's lives and these geographies, while at the same time making it really quite an interesting investment opportunity for lenders that want to go into that, because people always need water, people always need power. The demand for that doesn't go just because of a crypto winter. These are basic needs. So this is quite a resilient thing to bring to DeFi, particularly at the moment. So
yeah. So what would a kind of loan, an average typical loan look like? What kind of yield would it offer? What kind of terms would it be? What kind of guarantees or security would be required? Just an example of how it would look in a DeFi wrapper. Or sorry, just correct that. For the actual lender, which is not necessarily would the lender be in a DeFi space, or would that be the token holder?
Stanley, I think your microphone's repeating everything. Sorry. Ben's your mic's on mute, Ben.
Sorry, I was just saying, when Stan's mic's off, then on, we all need to turn our mics off to stop that voice back. I think I got the question though. So what would a typical loan look like? It's a bit of a sliding scale depending on the size of the project. To give you an example though, there's I mean, in our pipeline, we've got about 65 million US dollars of debt financing requirements from 11 different borrowers. The smallest loan, I think, is about $500,000. One of the larger loans is 14 million US dollars. And we in Silta are focusing on smaller scale infrastructure projects. So anything below 50 million US dollars in debt financing, at least in the first, year to year and a half. We may then go up to, larger numbers after that, but we want to focus on a particular sweet spot at the moment that we know smaller infrastructure projects struggle with because of these onerous due diligence processes and the cost of debt associated with that. So one of the projects that we're just starting to do a bit more DD on at the moment, they're looking for, I think it's a $10 million loan. It's a fixed interest rate of 6% with a tenor of 5 years on that senior debt. It's for a solar project that is going to make a tremendous impact if they can pull it off. I think it's going to power something like 40,000 homes and some businesses across 3 different islands. And this is a developer that has a track record of doing solar project. The CEO is ex-World Bank program director, so very much passionate about SDG as well. So that's for example one of these loans. At the other end of the scale, we've got a borrower that we've just started speaking to called Valkyrie in Spain, and they're looking for much smaller size loans to offer rooftop solar to a local community, and basically use these rooftops to build these solars and then charge or rather offer the energy back to the households at a discounted price. So the residents themselves don't have to pay for the solar panels to be assembled on their roofs. The roof gets rented out. They then get a discount on the solar that's given to them. And this is a really great way of transitioning people away from fossil fuels and getting us towards a more sustainable sort of world. In terms of the structuring of the loan, it really depends on who the financier is. So I mentioned that there could be some from TradFi, there could be some from DeFi. Each of these, the TradFi partners might have quite similar sort of structures to how they go about doing that lending agreement. In DeFi, it can get a little more complicated. So you've got the likes of Centrifuge, Maple Finance, Goldfinch, which is doing under collateralized lending. And within their protocols, they've got little nuances as to how that works. Then you've got others like Aave and MakerDAO that again have slightly different approaches. So it's very much on a protocol to protocol basis, but we will help each of those protocols by offering an agreement for this infrastructure financing that they can then basically take and add in different modules depending on what the particular infrastructure project is. And Stan can elaborate on that if you'd like.
Yeah, Stan, add anything to that because you were going to jump in there.
Okay, let's see if we're getting reverberation. Let me move to a different browser and I'll join the conversation in a moment.
It was fine then, Stan. As long as we turn our mics off, you sound good. Yeah. So,
but maybe Artie, can you just maybe answer the aspect of the token? Oh, sorry, are you ready to go, Stanley? Yeah. Artie, you were going to jump in and talk about sort of the token and how that works.
Oh, that would be Ben's domain. I would be talking about the scalability.
Yeah, I can hop in on that. Yeah. So the token use case. Yeah. So this is quite exciting actually what we're looking to do here. So the Silta token is a payment/utility token, similar to what Ethereum is in that regard, in terms of its classification. So the Silta token has a few roles. It's a payment token. So when borrowers submit applications to us for us to do these Silta scoring due diligence activities. They pay a fee in Silta. When the financiers want to pre-qualify to actually get access to our borrower pipeline, they have to stake in Silta tokens. They go through their pre-qualification, and then assuming they're approved, they then have to remain staked in order to continue to view the pipeline that's coming through, because we would have obviously done a lot of the legwork in making it easier for them to assess which opportunities they want to make offers on. Assuming a particular project gets financed and a loan offer is then made, an origination fee is paid out in Silta tokens, and an annual maintenance fee is paid in Silta tokens. Now, the annual maintenance fee relates back to an activity that we do during the Silta scoring exercise when we first look at the project. So one thing that we do is we review the impact that the project is looking to deliver, and we offer the borrower token incentives that will be released to them if the borrower delivers on those promises. So if a borrower says, you know, we're looking to make an impact by powering or giving energy to 40,000 households, reducing the need for diesel generation and various other different impacts, we may say, okay, let's assign some Silta token rewards that are locked in a smart contract and are released during the operations phase of the borrower's project life cycle as they begin to realize those benefits, because we want to incentivize good behaviors. We want to incentivize, you know, the things that are important to us. The other way that the Silta token is used is a governance token. And this is where I get quite excited, because in Silta, initially, Silta Finance will do the due diligence on different borrowers using this Silta scoring framework that we're developing. But ultimately, what we aim to do is actually decentralize that entire process. So some of that due diligence process will become automated, but there's obviously parts of it that can't become automated and will always require a little bit of manual effort. So in those instances, what we'll then have is different groups within our DAO that take on different roles. So we will have a Silta scoring committee that's comprised of say 8 seats of project finance specialists that come from different backgrounds that verify the scores that we've applied to a particular project. And that will be a rotating seat so that we're always getting fresh faces into that committee. We'll have due diligence advisors that come in and take on different roles to actually review these applications as they come through, and then push those to that Silta scoring committee. And then in terms of monitoring the projects after they've been financed and they're going through their construction operations, we'll have project monitoring officers, and they monitor, you know, the reports that come in to see how the project's progressing. Now, all of these parties are going to be remunerated in Silta tokens, possibly also USDC. It might be a combination. And there will also be token incentives in there for projects that get financed, don't default, and deliver on their sustainability objectives, so that everyone has got some nice alignment that, you know, we're all working towards the same thing here. We're all trying to deliver the same thing. So for those that come from the PPP industry, you could almost envisage it like a decentralized PPP center, where you've got this panel of advisors that have been pre-qualified, they're staked, and they're ready to take on different activities as these projects come in. And where I think the scalability gets super exciting is you can envisage like these regional teams of Silta scoring committees, like one in South America, one in Southeast Asia, one in GCC, with due diligence advisors and project officers also in those regions, then churning the wheel and putting these infrastructure projects through Silta to this pre-qualified lender base that then is financing them as well. And all of a sudden you've got, you know, this machine of sustainability driven infrastructure projects really churning through this protocol. And that I find super cool.
Great, thanks, Ben. One thing you mentioned there, which I want to pick up on, perhaps Stanley, you can give us some input on this, hopefully, if everything works. You mentioned that you want to incentivize people for not defaulting. Well, of course, default is a kind of something that is not going to be tolerated in a DeFi space. Projects that can go wrong, and it's not necessarily down to the developer, especially when you take into consideration geopolitics, international basis of this lending. So how do you look to address that in a way that ensures that the token holder, the lender, is protected as much as he would be in a traditional finance model?
Perhaps I can just add one comment on that. Silta itself doesn't provide the loan pools. So each DeFi protocol will have a different mechanism for how they deal with a default situation, as will a TradFi lender. So it's quite an interesting question. It really depends on how each of those parties decide to deal with it. But we will, in our due diligence process, review the borrower's application and identify those risks and try to de-risk, or not de-risk it, but highlight the risks as best we can. And what Stan probably gone to explain now is how a review of those off-chain collaterals is a consideration, and the security package that goes with it. But just to make it clear, Silta itself isn't offering the loan pools. That's a third party. So it's really on their protocol. Sorry, Stan.
No worries. I hope this time I can communicate without any embarrassment. Great. Okay, so I think Ben really touched on a very important point about our Silta assessment process, and that is helping in connecting borrowers to lenders. Our job is to filter out some of the bad projects. Now, project finance, people think projects are risky, but in reality, project finance has proven quite robust and quite low default rates globally and historically. So our Silta scoring process and our due diligence brings to the table a set of filters by which projects that are inherently risky will fall out in the early stages of our assessment process. So Silta cannot be taking a risk on putting a score on a project that is inherently risky. Now, how do we know if a project is inherently risky? We use traditional project finance tools. So our due diligence uses the same kind of robust due diligence that you would do with a traditional lender, as a traditional lender, in looking at a project. You're taking a look at the project fundamentals. So you're looking at the structure of the project, the legal structure, the licensing and authorizations of a project, and as your first level. And looking at those, you are making sure that the project has literally come to us ready for investment, ready for lending. On top of that, we then go deeper into various risks. And currently, our system that we're looking at is splitting the risks between the very early stage construction-based risks, which is generally the most risky phase of a project development, and then the operation phase, the post-construction phase risks. So our team assesses the project, looking at, have the risks that are natural to that project been buttoned up using the same tools that you would have in project finance. So Malcolm, your question was, well, what are those tools?
Yeah.
What we want to see is we want to be able to deliver a scoring and a due diligence report that has identified any of the unmitigated, unaddressed risks, loose ends, and then allow the lender and the borrower we would recommend to the lender and borrower a set of mitigating steps that they can take, such as making sure whether there needs to be a parent guarantee on any particular risk that hasn't been addressed, whether the insurances for the project are in place. So in a traditional project finance, you're going to have a whole variety of insurances. You're going to have credit enhancement devices such as parent guarantees, government guarantees, and performance guarantees. So that, for example, if your contractor, subcontractor, has failed to build the project to spec, the project owner, which would be our borrower, which would be the borrower, would be able to draw down immediately on those guarantees to make sure that the loan repayment schedule can be maintained. So we're, if I can just put it in a nutshell, what we will do is we'll provide a traditional assessment that identifies any remaining risks, and we will be making recommendations on what devices and tools can be used to mitigate those risks. Then that is now between the borrower and the lender in their loan arrangement to make sure that this is addressed. And then ultimately the investors within the loan pool, having had good information provided to them, will determine whether or not they're willing to accept a particular risk level of a project, a score level.
Great, thanks. That's yeah, that's great. One other area in the sort of operational side of things. Now, there's a layer of administration, for want of a better way of putting it, and there's a fair bit of work, even though you're looking at sort of making the process less cumbersome than it would be in TradFi. And the economics of that against the token and the fees, whatever, because there are obviously trad finance. How do you see that sort of comparing? And are there efficiencies that you're going to get in actually this decentralized distributed team of experts, should we say, you know, and remunerating them in tokens is one thing, but you know, you said it was going to be a combination. So do you see this as a cost center, as a profit center? What do you see that as going forward? Apologies for using all these traditional terms which don't come up in DeFi, but I kind of think that way, and ultimately it all comes out in the wash.
Yeah.
Sure.
Do you want me to kick it off?
Ben, you want to go at it first? Mm-hmm.
Sure. Yeah. So having sat in the TradFi table of acting as a lender's transaction advisor when you're paid on a time and materials basis, and your job is to pull away at every single risk that you can identify in a project and drag it out for as long as possible because you're on time and materials. I have first-hand knowledge of knowing how expensive that whole process can get, and it's really, I mean, people in the industry recognize that there's so much opportunity to standardize parts of that process and not reinvent the wheel every time, particularly on the legal. You know, there's a baseline set of stuff that could just be reused over and over, but seemingly doesn't. So we've already identified a lot of processes that we'll undertake in that due diligence activity that we think can be semi-automated, and as a result of that, it cuts down the amount of manual input that's needed. But what we also are doing here is we're designing a standard for how to approach a small scale infrastructure project within a specific segment. So we're going to do solar first, then we're going to move on to the next segment after that. And it'll be very much a standardized approach rather than how it is at the moment, which is, yes, PPP is a kind of standard way of working in itself, but it's a very broad thing. So we want to laser in on that and focus it down. And yeah, I mean, people will do activities in there and they'll need to be remunerated still to a level that is attractive to them. But you know what I find really exciting here? So having had my own company in the Philippines and the UK that specialized in PPP, and also having one in Hong Kong and Vietnam, one of the issues that the boutique and the SME level PPP consulting companies have is that on their own, they don't have all the long list of projects that they've completed. They don't have necessarily the relationships that that the top 5 in finance, in legal and engineering have, that always win the slots on every single PPP panel, is the same companies. And with Silta, we can change that, because actually there's some fantastic boutique companies out there that specialize in PPP, and even independents. And now they'll actually have a voice, and they'll be able to play a role in this. And they'll be significantly cheaper than going to these top 5 all the time, whose overhead is already just so high that is a large portion of the cost that then gets billed on these activities. So I see a great opportunity to embrace the SMEs, the boutique companies, the independents that specialize in PPP, and take a role in being part of that Silta DAO.
Yeah, let me jump in a little bit as well, Malcolm, based on what Ben said. A key element of our assessment will need to be standardization, methodology, a clear methodology that applies to each sector that we're supporting. We would like to go sector to sector to build depth and skills. So for example, our early projects, many of them hover around solar. This is great. We'll be able to do project A, maybe as a loss leader to ourselves, but then when we get to project B, C, the efficiencies will be greater. And what's interesting to me is, having come 3 of the top 5 law firms in the world, those top 5s, you would think that being in a top 5 international law firm would mean when you start a PPP project or a project financing, you've got the depth of material to jump right in, deliver contracts quickly and efficiently. But I haven't seen that as the case in reality. What I've seen is the same amount of billable hours are being applied to every single project, even though as if they've never done a project before. So drafting the contracts all de novo and starting all over again on a due diligence is not made efficient just by the size of the firm. So I think our focus is to cut away as much of the unnecessaries as possible, create a standardized process, and as Ben said, engage hungry firms who would adopt our procedures, our standardization, quickly add in and contribute.
Yeah, get it. Okay. No, that's really interesting. I can see, you've given that particular aspect quite a lot of thought. If I can move on to the tech now, and that's probably where we bring you in, Artie. Can you give us sort of an outline of what the tech's built on and why you chose Avalanche, and also, how scalable is this from a tech point of view? Because if this becomes, prolific, you don't want to have bottlenecks, do you, in terms of actually rolling this out?
Yeah. So this gets a little complicated, so I'll make it as easy to understand as possible. If you look at Ethereum, and if you have utilized Ethereum, you will know that the costs of transacting are very expensive. That's not really Ethereum's fault. It's because of how popular it got. So think of blockchain as a game of Tetris, right? You can only fit so many transactions in, and then people start paying more and more to have the transactions prioritized. That's why the transactions on Ethereum are so expensive at this moment, because it's a very popular blockchain. Now, the reason that Avalanche was chosen over others such as Solana is Avalanche has a very unique feature called a subnet, which is the idea came from sharding, but then they developed it further to subnets. And what that means is Avalanche acts as effectively a layer 0 blockchain. To put that in perspective, think of a city, right? Layer 0 is the land of the city. Layer 1 would be the buildings, and then layer 2 would be the shops inside the buildings. So Avalanche provides the land that you can build on, and then from there you can build a subnet, which is a building, and then even a layer 2. What that means is that despite how popular Avalanche becomes, Avalanche's the costs can always remain low because we can always build our own subnet. With that being said, Silta, the token itself, will be omni-chain. We're not building the token exclusively on Avalanche. It'll be on as many as possible. However, the initial protocol will be provided on Avalanche because we've weighed up the risks and benefits. And seeing that Solana's blockchain has, I think, halted 3 or 4 times this year, And Avalanche was, I think, the next one in line in terms of market cap and usability. That one was one that was selected. But effectively what I'm saying is that due to the subnet functionality, not only can we essentially brace off from that potential bottleneck and build our own layer one, we can also set our own transaction fees. That's a real possibility. So people won't be paying $200 to deposit alone in the pools or whatever it is, because we will always be able to build a subnet on that, set our transaction fees, and kind of set ourselves apart from that.
Right.
Okay. To add, sorry, just the other thing to add to it as well is Avalanche is very passionate about sustainability and impacts on climate as well, and their chain is sort of recognized as one of the ones that has perhaps lesser impacts than Ethereum had or might still have. So this was another reason, if we kind of need to eat our own dog food, so to speak. If we're gonna try and help finance projects that are sustainable, we need to be sustainability focused ourselves as well.
Okay, great. Thank you very much. I mean, the tech is kind of it's exciting. It's also because the whole sector is evolving and morphing, and the capabilities are kind of not just, but also the functionality is kind of expanding. Right. So presumably you have to keep up with the developments in the tech and implement at the same time, and introduce new features and ensure the scalability. So I'm just asking you, I'm going to hand over to Eddy in a minute and ask him to give a little bit of background on sorry, I lost you for a sec. Coinsilium's rationale, and also pose the question, no one objects in this space to a massively ambitious project. They all have to be. But on the scale of ambitious projects, this is up there. This is kind of, if this works, there's a lot of things are going to be changing, and people have looked at that across the board with crypto, but project finance particularly, and real world applications. And of course, that's what excited us. So maybe I can hand over to you, or ask you, Eddy, to jump in and give us kind of a little bit of background as to what your thought process was when you were first presented the Silta project, and what you find particularly exciting.
Yes, sure. I think it's worth noting that, interestingly, I think we're moving. I mean, we have been in crypto for a long time now. For me, 2013. I think what is great about projects like Silta is that we're actually moving away from crypto just for crypto projects to actually crypto and the whole, of course, infrastructure, blockchain as an enabler of financing real world projects. But the crypto part can stay a bit in the background. It's not a big problem, because as we can see here, we have been discussing the risks, the methods, and all those are not crypto related. All those are project finance related, and they come from the experience of Stanley in that space. And I think it's great that we're moving into that phase where, Coinsilium, we start to invest in projects where crypto is a tool, crypto is an enabler. And, of course, we invest as well in, we have invested in protocols and, and crypto tools. But I think this time there is a notable difference, is that this conversation is about the reality of the space in which Silta is actually developing a solution and building. And that's why we're talking about all these, lenders and borrowers and risks and associated to those. And I think that's great, because very early on, we have been speaking to, hundreds of entrepreneurs, and we always felt that, some entrepreneurs go beyond crypto, but in areas that they may not have the right experience for. And obviously, this was the case in the early years, because, as we know, crypto opens so many doors. People get extremely excited about it, and there is nothing wrong in that. There is nothing wrong in entrepreneurs trying to go beyond their comfort zone at all. But as investors, we have to be pragmatic and we have to look at the strengths and the weaknesses of the project. So when we got introduced to Silta, we really appreciated that, the fact that the founders have the right background for this, because in crypto we meet a lot of teams where extremely ambitious, but there is always something lacking, and usually the lacking part is in the experience of the real world, activity that they're trying to disrupt, and that has been the case in many, in many projects. And sometimes, investors pay that dearly, because, as we know, certain rules and principles don't change. I believe greatly in the transformational role of crypto and blockchain, but as we can see now, certain principles always, are always you always have to comply with, right? So I think that's great that we're moving there. And if we go back quickly to my coded income model, which was really more of an intellectual exercise at the time in 2020, what is interesting is in July 2020, when I wrote this article, the total value locked on DeFi was $2 billion. Last year in November, it went up to more than 100 billion, and now we're down to 40, for many reasons, including just the simple fact that crypto are worth less, of course. So, but in the period, a lot of people are only looking at prices, which is always a mistake, as we have learned through our crypto years, because in the process, this is not just a question of prices going up and down and value, etc. Is projects like Silta are the result of this movement as well. If DeFi platforms like, Ben mentioned Aave and some other platforms that are very popular, if these platforms had not done this work, had not been developed as they have been, then projects like Silta cannot exist today, right? And if you don't have the right infrastructure and so forth. So I think we have to look at the progress, which is not only a price-driven progress, but an infrastructure in the space of crypto itself, in blockchain. And this infrastructure that has been, the work that has been done, all the money that has gone into that, has not evaporated because Bitcoin is down, and people don't get this because, first of all, when markets are at $3 trillion and when markets go down to 1, it doesn't mean that you have exactly 2 trillion, that have been wiped out, because a lot of these market caps are, tokens that are never going to be sold, or, it's a bit more complicated than that, let's say. But at the end of the day, I don't know how many people are working in crypto today. Maybe some stats exist about that, but there are hundreds, thousands, probably millions of people working in crypto, and that's the exciting thing. And the exciting thing is, where does this touch real world economy? Not just jobs in crypto and so forth, but where does it touch the real world economy? And I was writing about this in 2020. It hasn't changed too much overall, because crypto traders still trade with other crypto traders. But what has changed is that we have projects like this, where someone in the Philippines can maybe tomorrow have water or have energy because of the project has been funded through blockchain or through cryptocurrency. And that's kind of almost an ultimate goal for this space, actually, when it started in 2010 or 11. This was the ambition, not necessarily the crypto trading. I don't think in 2010 or 2011 people cared much about crypto trading. I think the ambition was, how can this technology change people's lives? And that's great. So I'm very happy that Coinsilium has managed to go to this stage where we can invest in projects where actually crypto is just an enabler, and we talk about all these other interesting subjects around project financing and how to screen them, how to, and we're all learning. I mean, I know Malcolm has more experience in this space than I do, but we're all learning. And I was excited by the project, mainly from the team, because that's usually how we invest, And I met with Streamer back in London in 2017 anyway, so I have some background probably before Ben maybe was involved. But I have some background in kind of the mother, the mother company of all that. So yeah, so very, very excited to be part of this.
Thank you, Eddy. That's brilliant. Ben, Stanley, can you? I was actually going to this elephant in the room with regard to what's going on in the general crypto world, and I think Eddy addressed part of it. I want to ask you to give us a final point on perhaps before we go over to take questions. If anyone's got any questions, we've got a few here.
Lost Malcolm.
Can you give us an idea of your timeline from where we are now to the full deployment and where we sit?
Yeah, I think I understand what the question is. You're asking about our roadmap, are you, Malcolm?
Roadmap and time, yes. Put it that way. Yeah. But give us an idea of sort of, without holding you to your feet too close to the fire, when do you expect to reach significant milestones?
Sure. Just to make one point, following on from Eddy before I jump onto that, one thing that I find really reassuring in the market right now is that even though the token prices have gone down, what we're starting to see is organizations like JP Morgan now look at how to tokenize treasury bonds. We're seeing things from Bloomberg, we're seeing things with Moody, and I agree exactly with what Eddy said. If Aave hadn't have done over collateralized loan pools, it wouldn't have led to now there being these real world asset projects that are actually now developing on top of blockchains as well. So I personally, I know I'm biased, but I think the next thing that's going to happen is we're going to see this massive emergence of real world asset type projects, because people now want something tangible behind these loans that are able to repay the debt that's going back back to lenders. So this is all part of a journey, in my opinion, and that robustness is starting to come with some of the chains, obviously not with others, but with some of the chains. There's a lot of different apps that have been sort of battle tested through this process, and now we're seeing more of this real world asset stuff. In terms of our roadmap, so we're in a build phase at the moment. So there's a lot of heads down effort on the Silta scoring, on the DApp that we're building. There's a new website coming out very soon with the first version of our DApp, and that will enable borrowers to submit applications to go through a Silta scoring exercise. It will also list all the borrowers in a pipeline, and also the governance platform will be closely followed by that. We've got 4 key milestones on our roadmap, and we sort of have this journey of decentralization. So in milestone 1, we're still very much focused on doing the due diligence within the Silta Finance team, but starting to bring in a decentralized Silta scoring committee that basically verifies the scores that we're coming up with on projects. And as we progress through to milestone 3, we start to open source that Silta scoring tool that we've developed. We start to decentralize the due diligence advisor roles, the project monitoring officer roles, and so on and so forth. So still at the beginning. Well, it's not the beginning. We've been working on this almost 2 years now to get to where we are today, but still in a very sort of early stage. But there is some exciting releases coming up very soon, and as I mentioned, we've already got a pretty strong pipeline of borrowers with about $65 million of debt financing needs. So yeah, we're on a journey.
If I could jump in, I'd like to say that during this kind of shock we're facing and crypto winter we're facing, now is really a great time for us at Silta to get into what Ben says, build. Let's make something extraordinary. And let's not offer promises to the market that we cannot fulfill. And so we know that even if we had a product ready to go next week, maybe the market's not ready at this time to be funding the projects that we would like to see. So what our goal is over the next couple months is that we take what the achievements we've made to date, which have been pretty considerable, and improve them, deepen them, test them again and again and again, so that when we come out of this crypto winter, we're ready and our borrowers are ready to show the market that there's something to put their capital into that's important to the world.
Yeah. Yeah, sorry, Stanley, you were breaking up there a little bit, and I think we're struggling with it's getting a bit choppy. But thank you very much for that. I've got a question here, which if I can put that to you. DeFi platforms rely on stable coins, but following the UST debacle, stable coins are under scrutiny, and some considered as potential weak link in DeFi. What is Silta's use of stable coins, and what's your view on them?
So we don't provide the loan pools ourselves. This is an important thing to bear in mind with Silta. So we pre-qualify financiers, whether they be from TradFi or DeFi protocols, to be able to get access to our pipeline. And as part of that pre-qualification process, we will look into how the loans will be provided, the types of stable coins that will be used. There is beginning to be CDBCs being discussed as well and looked at. I think the Philippines is going to start piloting one quite soon. And obviously, that's a target market for us.
Yeah. So that to clarify, central bank digital currency. So it's a bank of a country which will issue its own currency as a crypto. So in effect, that's going to do away with the need for stables.
Just to piggyback off that, the fall of the UST wasn't so much because it was a stable coin, but because it was the way that it worked, it was an algorithmic stable coin, so it wasn't a backed stable coin. If you look at a coin such as USDC, where it's backed and they provide the actual amount that they have provided in the treasury, that's a different class altogether. So despite them both being stable coins, the way they work is different, and the risks are much less when you have a backed stable coin.
Yeah, but of course you've got to be able to trust the backers and what's in the pot that's backing it, which is a whole other area and subject as well. And then arguably you move on to, do we trust the central bank that's issuing the
Well, I was about to say, Malcolm, dare I say it, we have to trust banks still.
Yeah, well, we have to tread very carefully in that regard, but nonetheless, we all know what we think. Gentlemen, thank you. One other point I'd like to raise before we sign off. I heard a very interesting anecdote today where someone said to someone, what do you think? Crypto is crashing. What the hell's going? And the answer was, there's nothing. Crypto is doing what crypto does. It's the humans that are the problem. It's the centralized CeFi solutions. It's people not doing what they purported to do. It's stuff that's going on in obfuscation. It's not the transparent stuff that's going wrong. So I thought that was quite an interesting takeaway. Probably worth thinking about, but nonetheless, at the moment we're going through that period, which, the longer you've been in the space, the more you recognize these occasions. And we had a call with the tech team this morning, and we're just coming up. Well, they're coming up with ideas, and they're carrying on building. And this is just like sort of, you can't go out because there's a snowstorm, but it doesn't really mean that it's not going to end. Sure, there'll be wealth will pass from some hands to other hands. The people who went out swimming without any clothes on, naked, or whatever the other analogy is, will be caught out. But ultimately, this technology is not going away, and it's the time, as you say, to build.
Yeah.
Thank you all very much. I'd like to thank the panel for your participation. I hope you enjoyed that as much as I did. Thank you very much for our guests for attending. We'll hope to catch up with you soon. We'll be keeping an eye on your progress as you would expect us to. Any final words from you, Eddy, or any of the team?
thanks for listening to us today. I hope you enjoyed this discussion. I've certainly enjoyed sharing some thoughts on this today. And if you want to follow the project, hop over to Silta.finance website, and also our Telegram channel and Discord channels where you can interact with the team as well. So, thank you.
That's what I was going to say. Ask if people want to find out more about
Thank
Silta.
you so much for joining. It was really great to hear from all of you, mainly because DAOs are so interesting time, and because you guys experience but the practical knowledge of what's happening in this space. So it's great to have you all. And again, thanks to everybody who's joined the session today, and we look forward to seeing Silta's progress. Thank you.
Okay. You will be recording this. Where will the recording be available? Okay. I was going to ask where the recording will be available. Denise?